Hello, I'm Ant Joblin and welcome to Wall Street Connected, the show that highlights what Wall Street's finest are researching online. Today we're going to talk about an industry giant that started its journey in the early 1900s and now caters to millions of customers across North America. Allstate was initially a part of Sears, Roebuck & Co. when launched in 1931, but was spun off in 1993. Allstate is considered an industry giant in the global ride-sharing insurance market and competes with global players like Allianz, AXA and PEMCO. It is also the largest publicly held personal lines property and casualty insurer in America, serving more than 16 million households nationwide and has a market cap of $33 billion. The firm's shares closed down close to 3% on the year, but still included a 45% rally from the March COVID lows. According to Trackstar IQ, our proprietary search tracking tool, 31 institutional Wall Street investors researched the stock 169 times over the last 7 days. 13 Wall Street analysts cover the stock and they have an 86% buy consensus on the stock too. Some of those, including the likes of Bank of America, Morgan Stanley, Barclays and Wells Fargo, have put Allstate on their watch list based on recent solid financial disclosures. Allstate announced Q3 2020 results, which showed not only a $2.94 earnings per share that topped most forecasts, but a 16.7% return on equity versus 2.7% compared to the same quarter last year. The insurance conglomerate also announced a quarterly dividend which was paid on January 4th. Shareholders were paid a 54-cent dividend which represented a $2.16 dividend on an annualized basis and a yield of 2.02%. It should be noted that Allstate issued $1.2 billion of senior unsecured notes, with proceeds from the issuance expected to be used as part of the funding for its pending $4 billion acquisition of National General Holdings Corp. In all, this is a firm that has responded strongly to the pandemic and is impressing analysts and investors alike with strong performances and a valid expansion strategy. We think that makes it worth keeping an eye on in 2021. That's all we have time for this week, but as usual, make sure you do your due diligence before making any investment decisions. To find out more about our Trackstar IQ data, sign up to our free newsletter at investingchannel.com/Trackstar.